Hello. Adeste Fidelis, or Come All Ye Faithful, is a well-known and popular Christmas carol. And in the context of recent events, you might wonder, what do people believe in anymore? In Europe, many people no longer believe in the EU. If the results of the Italian Referendum last week are to be believed, a lot of people no longer believed in the established political parties across Europe. Indeed, the last year has been a year where politics has really marked the landscape. We've had Brexit, we've had Trump, we've had the Italian referendum. What could possibly go wrong in 2017? Well, we think the political risk premium will loom large. If you haven't seen it already, our investment outlook for next year is out, and the title is Conflict of Generations, which I think speaks to many of the underlying political currents and political tensions. Next year, of course, we have elections in France and in Germany. And this is a theme we will, I think, revisit on a frequent basis. In markets, what do people believe in? Well, for the last 5 years, maybe even longer, the one thing investors have believed in is central banks. And the power of central banks to dull economic pain, to support markets, and in some cases to support economies. But we think this is slowly going to change. By the time this video comes out, we will have had the ECB meeting. I think the ECB, on one hand, is eager to continue to support market calm, particularly in bond markets. It must also be happy that the euro is trading at these low levels. But it knows that the European economy is very slowly recovering, inflation is beginning to come back, and that, like the Fed, at some stage they must begin to taper back their purchases of bonds. So by the time we get to this time next year, the outlook for the ECB could well be quite different. And again, politics is also likely to be to the fore. More importantly, look at the Fed. The Fed has had great difficulty in the last 2 years in trying to communicate its strategy. It's had great difficulty trying to forecast the US economy. And the Yellen Fed, it must be said, has not been a smooth one. I think we're close now to a point of departure for the Fed. Inflation is beginning to rise, albeit steadily, in the US. Growth is picking up, and expectations of growth are certainly beginning to pick up. And expectations that fiscal policy under President Trump is going to become much more active in combination with quite loose monetary policy. So next year we may well see a more hawkish Fed. I think the risks are certainly to that side. The Fed can no longer, I think, afford to drop back into this dovish position. Next year we're also likely to see changes amongst the Fed governors. The Trump administration can appoint 2 new governors. And as we get through the rest of this year, the debate will begin on who is going to be the next person to head up the Fed and who will be the next vice chair. So one of the points of friction in currency markets, in fixed income markets in particular next year, will be the Fed, the extent to which it becomes more hawkish, and the extent to which the personnel at the top of the Fed begin to change. And this, like politics, will be another source of volatility into markets. I think from our recent investment strategy, we've made a number of changes in this regard. One is to become more positive or more bullish on the US dollar, and there's a few reasons for this. In a sense, it's a hedge against something going wrong in some part of the world economy. The dollar is the safe haven. We're more positive now on the dollar against the Canadian dollar. The dollar itself is a play on Trump's infrastructure plan, and the Canadian dollar, in a way, is being short the Canadian dollar is a hedge against trade tensions between the US and countries around it. We've also taken the view that we're more positive on the dollar relative to some of the key European currencies, the Swiss franc, and notably the euro. I think political risk in the background plays a role in that. And I think for the time being, the ECB will continue to be quite accommodative. So I think that being positive of the dollar maybe is one way of expressing this view that investors' view of central banks, and particularly the Fed, next year is going to change. So as we head into 2017, investors need we think, to reset the way they view central banks, in particular the Fed, and the risks, I guess, are towards the Fed becoming that bit more hawkish if President Trump is successful in implementing his infrastructure plan. Thank you.